Summit Financial's $1.2 billion RIA expansion, strategy and market impact. Imagine a financial services landscape where growth isn't just about numbers, it's about strategic partnerships, brand autonomy, and bold bets on the future. That's exactly what Summit Financial, a New Jersey-based registered investment advisor, RIA, overseeing $20 billion in client assets, is betting on. But here's where it gets controversial. How do you scale a firm while letting each partner retain their unique identity? Let's dive into the details. Summit recently announced the acquisition of 4 independent RIAs, collectively managing $1.2 billion in assets. Through its Summit Growth Partners (SGP) program, the firm is offering a hybrid model, combining cash and equity investments, to allow advisors to join forces without surrendering majority control. All 4 new additions have merged under Summit's regulatory umbrella, Form ADV, but are keeping their original branding. This approach raises an intriguing question. Is maintaining brand identity more important than a unified corporate image in the RIA space? Take Everest Consultants in Syracuse, New York, for example. Founded in 1997, this fee-only RIA brought $633 million in assets to Summit, serving 370 households and over 100 institutional clients. Led by Alexander S. Pasquale, Nathaniel Gavitt, and Anita Lombardi, Everest's integration in March 2024 highlights how legacy firms can balance tradition with growth. But what does this mean for client trust? Does a firm's history matter more than its network scale? On the East Coast, LPF Advisors in Sarasota, Florida, added $277 million to Summit's coffers. Founded in 2019 by Mark Pitkai and Christopher Flamang, who previously worked together at 3 broker-dealers for over 20 years, LPF's journey is a case study in advisor collaboration. After a brief stint with Osaic and a brokerage switch to Persh Kaplan Sterling, Flamang called Summit a partner that created a path to growth. Yet, isn't there a risk of over-reliance on a single platform for long-term independence? In Dublin, Ohio, Heritage Wealth Partners, a team of 4 led by Matthew Keys, joined Summit with $176 million in assets, serving 920 households and charities. Keys described the move as the next logical step, but what does that say about the pressure to consolidate in a competitive market? Meanwhile, in Albuquerque, New Mexico, a trio led by Thomas and Vicky Crow, a husband and wife team since 2000, added $143 million, advising 270 households. Their story underscores the human element in these deals: families, trust, and decades of client relationships. Summit's strategy isn't just about size, it's about velocity. This year alone, the firm has completed 11 minority investments, including high-profile acquisitions like Genex Consulting, $700 million, and Gateway Advisory, $830 million. In May, 2 more deals with Parsons Broach Financial Services and Grandview Square Financial added over $560 million. With 46 affiliated practices now under its belt, Summit CEO Stan Gregor has set his sights on $100 billion in assets by 2029. But here's the elephant in the room: can this pace of growth be sustained without diluting the quality of service? The industry is watching closely. According to DeVoe & Company and Echelon Partners, M&A activity in the RIA sector is at record levels. Yet, Summit's approach, prioritizing autonomy over uniformity, could spark debates. Is this the future of financial advising, or a recipe for fragmentation? We'd love to hear your take. Do you think Summit's model strikes the right balance between growth and independence, or is it setting itself up for long-term challenges? Share your thoughts below. Summit Financial expands with $1.2 billion quadruple RIA deal, major industry move. Imagine this: a financial powerhouse just dropped a staggering $1.2 billion in a single, audacious move. Welcome to the world of high-stakes investing, where Summit Financial just pulled off a quadruple deal that's sure to raise eyebrows and spark conversations. But here's where it gets controversial. This isn't just about the money, it's about the strategy, the risk, and the sheer audacity of it all. Let's dive in and explore the details, because this is the part most people miss when they hear about massive financial deals. First, let's talk about who's involved and why it matters. Summit Financial, a name that's become synonymous with bold moves in the investment world, has just made a play that could redefine the landscape. But before we get into the nitty-gritty, let's set the stage. Who are you in this financial drama? Are you a professional investor, a seasoned advisor, or perhaps a private investor looking to make your mark? Your role in this story matters, and it's going to shape how you see this deal. Now, let's talk about geography. Are your clients based in the US only, or do you have a global reach? Maybe you're somewhere in between, with a mix of US and international clients. Or perhaps none of the above applies to you. Either way, understanding the scope of your operations is crucial when it comes to making sense of this quadruple deal. Next up, let's talk about staying in the loop. In the fast-paced world of investments, information is power. That's why Summit Financial is offering a goldmine of resources to keep you ahead of the curve. From breaking news and cutting-edge commentary to the latest insights from industry leaders, you'll have everything you need to make informed decisions. But here's the kicker, this isn't just about getting the news, it's about getting the right news, from the right sources. Summit Financial's award-winning team and leading industry voices are at the helm, ensuring that you're always in the know. And let's not forget about the partners. Citywire, a name that needs no introduction in the investment world, is bringing you the latest news and relevant content from their selected partners. This is where the magic happens, where the deals are made, and where the future of investing is shaped. So, what do you think? Is this quadruple deal a stroke of genius or a risky gamble? How does it fit into your investment strategy, and what can you learn from it? We'd love to hear your thoughts in the comments. Let's spark a conversation and see where it takes us. After all, in the world of investments, every deal is a story waiting to be told, and every story is a chance to learn, to grow, and to make your mark. So, what's your take on Summit Financial's $1.2 billion move? Let the debate begin. Summit Financial expands with 4 new RIA partnerships, adding $1.2 billion in assets. Big moves are shaking up the independent advisory world. Summit Financial has just pulled off another string of headline-grabbing acquisitions, strengthening its national presence and sparking fresh debate about consolidation in the industry. For accomplished registered investment advisory (RIA) firms, stretching from New York to Florida, Ohio to New Mexico, have joined forces with Summit Financial, collectively bringing in a remarkable $1.2 billion in client assets. This bold step, announced Monday, solidifies Summit's growing status as a major player in the fiercely competitive independent advisor space. Here's the lineup: Crow Financial Advisors, helmed by Tom and Vicky Crow in Albuquerque, New Mexico, comes in with oversight of more than $143 million in assets. Everest Consultants, with roots in Syracuse, New York since 1997, commands a whopping $633 million and serves a diverse clientele spanning individuals, families, and entrepreneurs across the Northeast. Joining them is Heritage Wealth Partners out of Dublin, Ohio, managing $176 million and taking a holistic approach that blends investment management, comprehensive financial planning, insurance, and tax services. Rounding out this wave is LPF Advisors of Sarasota, Florida, responsible for $277 million and having recently teamed up with Summit as well. But here's where it gets controversial. Is the rapid pace of mergers and acquisitions really benefiting clients, or is it just fueling a race to build financial juggernauts? Summit, now comprising over 150 advisors in 23 states and overseeing upwards of $20 billion in assets, as of July 21, certainly sees its momentum as a win for all stakeholders. Chairman and CEO Stan Gregor cites these new partnerships as evidence of Summit's 4-decade dedication to empowering advisors and providing long-term value to their clients. It's a strong validation of Summit's growth strategy, Gregor told reporters. These latest deals, all facilitated with strategic capital and expertise from Merchant Investment Management, push Summit's running tally to 29 investments since early 2024. This includes 11 transactions so far this year alone, among them, a major pickup of Missouri-based Genex Consulting and an influential partnership stake in Alabama's Parsons Broach. With every new addition, Summit is fueling its reputation as one of the fastest-growing RIA platforms nationwide. Tim Bello, co-founder and managing partner at Merchant, didn't mince words about the news, labeling it another exciting milestone in Summit's impressive growth journey. For those keeping score, that's not just bragging. Market researchers at Echelon Partners just reported a sizzling pace of deals industry-wide, with 102 transactions totaling a staggering $828 billion in assets during the second quarter of 2025 alone. And this is the part most people miss. While consolidation can create economies of scale and potentially boost service offerings for clients, does it also risk diluting the personal touch that independent firms pride themselves on? As more firms join sprawling networks, will clients ultimately benefit from expanded resources, or could vital local relationships get lost in the shuffle? What do you think? Are these strategic deals a blueprint for future success, or do they signal a worrisome trend towards industry homogenization? Share your opinion in the comments. Are you excited by the idea of a stronger, unified advisory force, or concerned about what this means for client choice and individuality? Let the debate begin.